Welcome back. In the previous lecture, we introduced levels or waves or impulses. However, it was subjective and non-mechanical. What do I mean by that? By subjective, it's something that was going to be different if analyzed by two different traders. Trader A would say, I was seeing this, and Trader B would say, I was seeing this. So we are going to introduce indicators. But before we do so, we just need to highlight these points. The trading industry has conceived a naked chart trading mantra. But before we go with those masses, can we have a moment to critically think and answer the following? The first question under indicator justification is, how do we know if we are in a diverging market without indicators? How do we know we are in a trending mode without indicators? How do we eliminate fake setups? How do we remove subjectivity? If we can answer these questions, we can simply throw away the indicators. But in my case and experience, I've actually seen that indicators will help you navigate the markets without any problem from these. Basically, indicators are not going to predict the market, is what the traditional traders would say, that if you see a cross of this and that, buy. If you see that and that, buy. But indicators are going to be indicators. They are going to indicate what is happening within the markets. Is the market trending or not? Are we in a divergence phase or not? Where are we going to start off? Where is our datum or our point of start to analysis? That is basically what our indicators are going to be used for. So before we answer each and every question that is above, we need to actually talk of the indicators that we are going to use. We are going to have two categories: the trending indicators and the entry confirmation indicator. On the trending side, we are going to use exponential moving averages. These are default indicators that are obtainable on any trading platform, be it TradingView, CTrader, DXTrade, NinjaTrade, MT4, MT5. You'll find the exponential moving averages. They are all applied to close, and these are their periods. We're going to have 5, we're going to have 13, 50, 200, 800 exponential moving averages. The colors are of your choice, but I'll show you on the charts the colors that I love. For the purposes of those who know these indicators or have already set those indicators, this is a time to actually re-evaluate how we use these indicators. As I've said at the beginning of this course, we need to wipe away everything that we know about trading so that we install new stuff and updated content. Then on the entry confirmation side, we have the Traders Dynamic Index. It's actually a free indicator out there which is used to confirm our entries. As you've seen from our course outline, we have corrective entry points, we have reversal entry points, we have continuous part of running flat entry points. And we will talk all of those, and they all require the Traders Dynamic Index to increase our accuracy. So how do we know if we are in a divergence market? We use the Traders Dynamic Index in conjunction with the levels that we have discussed in the first lecture. How do we know that we are in a trending mode? We use the indicators under trend, which are the moving averages. And how do we eliminate fake setups? A combination or a hybrid operation of the EMAs and the Traders Dynamic Index will actually help us to eliminate fake setups. Then how do we remove subjectivity? It's now a hybrid of operation using both the trend and the confirmation so that we remove subjectivity. They also help us to simplify how we see the levels that we have been doing on naked charts in the first lecture. So these are going to be the tools that I was telling you in the first lecture to not to panic, and they are going to simplify everything for us. Now let's now go on the charts. That is where it is important, because that is where the money is. So I have already set my chart into this preference. I have actually installed the indicators. It's now different from the first chart that we talked about. As I have said in the first part of this lecture, it's going to be on chart setup. We are setting up the chart so that we are now going to learn how to use everything that we have set up in lecture 3, which is under labeling. In this particular case, we can see I have a divided screen on the bottom side and the upper side. The bottom side is going to be the trader's dynamic index, and I'll provide each and every one of you with the trader's dynamic index, which you can install easily. Basically, come under open folder of your MT4, and then you can actually paste the indicator that I would have given you. If you are trading on TradingView, you would actually search TDI BTMM. That is the one we use, and the trader's dynamic index will come on your charts. Then these are easily pasted on the charts by simply going under indicators, trend, and then you pick moving averages, which are exponential. So I'm going to define each and every indicator on my screen so that we will be on the same page. The yellow one is actually a 5 EMA or period 5 exponential moving average. The red, period 13, the blue, period 50, then the white, period 200, and then last but not least, period 800 in dark blue. These indicators actually helps us to segment the markets, to see how the markets are flowing. Whilst on that note, we have the trader's dynamic index, which is a green line, which is the RSI line or the relative strength index line. This helps us to see whether a particular currency is rising its relative strength or dropping its relative strength. The blue one are the Bollinger Bands. They are derived from Bollinger Bands, and they are called the volatility bands. They actually give us a boundary, an upper and a lower boundary of the play of the RSI line. The one in the middle is basically a division of the upper side and the lower side. And then the one in red is actually a signal line, which helps us when we are now making our entries at the points that we have discussed. So, how is this going to change how we see our levels? We are still on euro against the dollar, and if I go to the monthly time frame, this is how it will look like. If you remember in our first lecture, how it looked like, it was actually a little bit subjective because everyone was seeing anything that they want to see. But in this case, there are now crossovers. There are now market interaction with indicators. And we can see the market still the way it was before. So, where are we going to learn on how to use these indicators? On chapter 3, where we are going to talk about labeling, that is where we will talk much on these indicators. How we use these indicators to find levels and how we use them to make entries. Whilst on that, we can see that if we are on the monthly time frame, we have this 200 EMA. This is now to answer those who are asking, what is the use of all the EMAs that are on our charts? As we move down the charts, the time frames, the indicators also alternate to match that particular time frame. Therefore, we can say a 200 EMA on the monthly time frame is basically an 800 EMA on the weekly time frame. This is what we see. On the monthly time frame, we saw this was a white indicator. But on the weekly time frame, it's now a blue indicator. We can see it's now a blue indicator on the weekly time frame. This white 200 EMA on this weekly time frame, it will become a blue indicator on the daily time frame. If we go on the daily time frame, this is how it looks like. This white indicator or white EMA on the daily time frame is actually a blue EMA on the H4 time frame, right? So we have this white indicator on the daily time frame. If we switch to the H4 time frame, this is what we will see. It's now a blue indicator. What are we saying by all this stuff? All indicators from the 5 EMA up to the 800 EMA, they work in conjunction so that when we shift our time frames, they actually shift to suit the time frame that we are looking at. Therefore, we need all of them, not a few of them. It's actually something that was studied and something that was discovered to get these particular things in place. Therefore, this is the chart setup, or this is how I need to see your charts looking like when you are making your analysis. If you are on TradingView, you have the privilege to actually switch off all the indicators at once so that you can even see the markets clearer and switch them back on at once so that you can use the indicators to actually make your trading decisions. On that note, we've come to the end of our second lecture, and let's meet in the third lecture where we will talk about the labeling.